What's up, YouTube? It's Todd Horst here with Tasty Tracker. I just wanted to do a quick video on some of the predictions on the tops. And they're predicting that a crash is coming because of this reason or that reason. Particularly, I've seen a bunch of videos from the Game of Trades YouTube channel, but it's not just them. It's sort of every channel loves to, think that they have the inside information, the insight, the knowledge, and luckily they do, admit that they can't predict the future, so anything could happen. But it's just sort of the thought process behind a market crash that any one indicator or pattern to them is evidence of a downturn. So, I have the weekly view up here of S&P, SPY for the last 20 years, 25 years here. And specifically wanted you to see the 2008, 2009, and then obviously the recent crashes, but and then even the .com kind of downtrend. When you're looking at a chart, you can't just say, well, this little section here looks similar to this section here. So therefore, right here, we're going to have a downtrend. That's not the way it works. Basically, in order for a downtrend to a substantial, a significant, a reasonable downtrend to occur, you need to have something that kicks that off, some event. So like I said, we've got the housing issues, we've got the .com issues, we've got COVID. These kinds of scenarios are what cause these long-term downtrends. If you have something like a flash crash, or something similar to that, you'll get some consolidation in an area, but I wouldn't consider this to be a bull market. It's still within this channel of reasonable volatility. And if we look at today where we're at, the market, if we were to ignore COVID ever existed, the market was basically on this upward trend anyway. And then since COVID, they've even, lowered interest rate, did all this stimulus in order to prop it up, to make it look, in essence, like COVID never happened. And then when you, so if you ignore COVID, the current trend is back to where we were prior to all of this, and that kind of makes sense. Yes, obviously, this has been tragic, both for people maybe that closed out of positions down here because they thought it was going to go further. A lot of people blew up their accounts, and a lot of people lost their lives. So this isn't, a joking matter or anything like that, but it really starts to grate on me if you continually call the top because a couple bars look similar to a couple bars here or here or here. In order for a meaningful downtrend to happen, you have to have something that triggers the downtrend. They don't just happen because something got toppy. Now, if something gets toppy, yes, it will consolidate in a range. And then, like I said, you can see 100% normal dips as it finds its support, and then will consolidate further until it can proceed going up. But things don't just turn down for the fun of it. Something has to happen to trigger that downturn. So, I don't know if you want to help spread the word, or just maybe this brings some levity to our current situation. If we were to, again, if COVID were to never have come, we would most definitely be in this range. And then when you add the stimulus on top of that, then it continues to make sense. And yeah, I think this is momentary. We all know the market is forward-looking, and my opinion is that vaccines will, as well as other mitigation, will reduce the impacts of COVID exponentially moving forward. So 1 year from now, 5 years from now, I don't believe in 2025 people will be talking about COVID-19. Just my opinion. So when you take that into account, that does not mean that, oh, because we're higher than we were pre-COVID, now that we will all of a sudden have a downturn and start a bear market. Certainly, yes, it can consolidate here, but you have to remember that this period in here from 17 onward to the end of 19 were in and of itself a consolidation period, and we had some growth here, and then in and of itself here we have a consolidation period. So we have these periods of consolidation. I believe at this point, even if we did consolidate, it's going to be in this box up here, maybe right below the 400. So, you're thinking about 360 to 400 could be a very logical next point to consolidate in. Um, but that doesn't mean anything. Certainly could consolidate here if we wanted to around the 350, 340 to 360 range. My whole point here is um, having a pessimistic view or trying to predict is sort of a fool's errand, not worth your time. And hopefully, this message will be able to help out people that are feeling shaky, getting nervous. I'm not saying uh, you should listen to those feelings and fears to a degree. And if you're truly worried, then scale back your positions naturally. But that doesn't mean you should abandon all your positions or call for the end of the world. These are normal fluctuations. And I don't think the situation we're in today, even with rising cases, is at all similar to previous market crashes. So I'll leave it there, and I hope you guys have a good one. Thanks.